Etsy, ticker symbol ETSY, is down over 81% off its highs. And in this video, I'm going to talk about why you might regret not buying this growth stock on this dip. I'm going to share with you my valuation of Etsy stock using my discounted cash flow model. I'm going to share with you the valuation using the forward price to earnings ratio, and then look at the longer term performance metrics for Etsy on revenue, on cash flow, operating margin, return on invested capital, and discuss the company's business model and the market opportunity as justifications for why I believe this dip here is a buying opportunity for long-term investors. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So like I highlighted, Etsy stock down over 81% off its highs reached in early 2022, late 2021. The primary reason why Etsy stock price is down is because the company's found it difficult to grow at the rate it was growing before the pandemic. The reason for that is it surged during the early stages of the pandemic as people flocked to Etsy's platform to buy more of those custom-made masks. And so since it added many millions of customers during that time, some of those customers are leaving and it's having difficulty replacing the large number of customers that are leaving from that surge in 2020. That's not something to be overly concerned about. That's typically the case for what happens when companies experience a surge of new customers. It's typical to see customers leave over time, right? Even Costco, which has one of the highest customer retention rates, only keeps about 90% of its members year over year. So if you can imagine, Costco has over 60 million members. Every year, maybe 6 million leave. And so Costco needs to replace those members if it wants to continue growing. Etsy's in a similar situation, although it doesn't have those high customer retention rates as Costco does. The one thing Etsy had going for it is that huge surge in customers that like the platform, that experienced the platform during the earlier stages of the pandemic. Now, Etsy's operating margin has also come down since those peak times during the pandemic, but at 12.17%, it's still a solid double-digit profit margin for a company still in early stages of development. The business model is very lucrative. The platform business model that I've talked about that brings together two sides of an equation, and Etsy takes a percentage of every transaction. To make it more impressive, one of the 6 steps in my framework for investing, if you already know, is competition. And the competition in this industry is easing, making it more attractive for investors. What I mean by that is its rivals like eBay and Amazon are raising fees they charge to sellers, and so is Etsy. And so that transaction fee that they take, the percentage has been increasing over the years. And since competition is also increasing those fees, sellers don't have anywhere to run to. The people on the platform might get annoyed, but there's nowhere they can go because Amazon's raising fees, eBay is raising fees, every platform that operates in this industry is raising fees. Nearly every platform that operates in this industry is raising fees. So that's what I mean by attractive competitive dynamics. Those types of dynamics are favorable for investors. The cash flow from operations to sales at 26% is also strong. And even though you might not see it on the screen here, the cash flow from operations to sales ratio will likely continue rising because the company operates that attractive platform business model that doesn't need to reinvest a lot of the cash flow back into the business. Etsy, the cash flow that it generates, it can return it to shareholders through buybacks or through dividends eventually, because this asset-light business model generates a great degree of profit per dollar of sales, or profit per dollar of assets, or net income per dollar of sales. Regardless of the performance metric you want to evaluate, these types of business models, the platform business models, operate strong levels of performance on profitability per dollar of assets, per dollar of sales. The return on invested capital has also been solid, even though you don't see it on the screen here at 15%. The the return on invested capital is among the higher ones that you'll see out of any company in this category with this brief of a history. Throughout, as it builds the business, as it adds more customers, the return on invested capital is likely to improve because the profits will expand while the capital investment remains flat because it's not needing to reinvest so much capital into the business. And then finally, valuation is very attractive for Etsy. When measuring it on a forward price to earnings, the stock is trading at a forward PE of just 10. That's a ridiculously cheap valuation according to this metric. Especially if you look back the last 3 years, this is the cheapest you've been able to buy Etsy stock according to this metric, a forward PE of 10. Furthermore, when I did a discounted cash flow model on Etsy stock, I found the intrinsic value per share to be between $58 and $97. The beta of the stock is 1.99. When I adjust the beta lower to 1.75 or even 1.5, that gives me an intrinsic value per share of between $67 or $80. The current market price in relation is $55. So you're able to buy Etsy stock at $55, where I feel the intrinsic value is at least $58, but could be as high as $97, depending on the beta that I use, the risk measurement metric that I use for Etsy. So whether I value the business on a discounted cash flow basis or whether I value the business on a forward price to earnings basis, the stock looks cheap according to those metrics and the performance of the business longer term. So that's why I've talked about in this video why I feel that being down over 80% off its high and trading at $55, I think Etsy is an attractive stock to buy and one that you might regret not buying at this lower valuation because it may not remain at this level for very long. However, on the flip side, there are risks. This isn't a business that is going to grow rapidly. The Wall Street analysts are only expecting roughly 160 million of free cash flow growth between 2024 and 2028, rising from 680 to 840 million. So those slow growth prospects could hinder the company's long-term viability. Still, all else being considered, I feel the risk versus reward is very attractive for Etsy stock right now. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.